Welcome to Yellow Tunnel and Tradespoon. My name is Lakar Pell. I'm CEO and founder of Yellow Tunnel, and today we're going to have another session which is also simultaneously broadcast on Tradia. So welcome, Tradia users. This is an episode where we're going to talk about oil, we're going to talk about gold, we're going to talk about Adobe earnings, and the macro and microeconomic conditions as we are approaching the options expiration, triple witching expiration on Friday. There could be more volatility in the market. Interest rates are continuing to go higher. So let's jump in and review. On GoToMeeting, Tradespoon Yellow Tunnel subscribers, welcome. If you can just type in yes to make sure we can hear you guys can hear me. Fred, yes, perfect. Okay, great. So for those of you who are new, this is my brief bio. Again, the difference between the unique proposition for Yellow Tunnel and Tradespoon is that I have a team. My background is technology. I have a master's degree in computer science. We have a team of financial engineers that are taking advantage of the latest advances in artificial intelligence, neural networks. So we have models running every day, basically learning on price action of different stocks, ETFs. It finds the most optimal model, right? Not every setup, not every model can predict all the stocks, right? So you have to find the models for biotech will be different from models for consumer staples. So we find the stocks and the best models, and then we every day produce results based on our AI. What are the best stocks to outperform the market short term, medium term, or long term? And not only do we provide the signals, I actually trade them, right? ExxonMobil, silver, gold, these are recent trades from this week that I've been trading using these models. Disclosures are important. Trading doesn't involve risk. So I encourage you, if you're new to trading, please visit optionscreening.com so you can understand the risk associated with trading stock or options. And you can pause the screen if you need more time to read the disclosures. Right, before we talk about trading psychology, let's talk about gold and oil first. So looking at the crude oil, right, let's look at the crude oil. So crude oil did break through the 80 level, right? We talked about this. You have to go back to last November of 23 to see crude oil at these levels. So you do have, Wednesday we had the data that oil reserves went down, right? And the economy is expanding. You have China looks like found the bottom, and Europe may or may not be in recession. There's no signs of recession in the United States. So oil finally looks like it's breaking out, and you can see it in the price action, whether you're following ExxonMobil, crude oil. So just some of the examples we had today, I think it was Occidental Petroleum. So if you go to Aggressive Power Trader or Active Trader on Tradespoon, you can find today's signal was General Electric, Occidental, right? So ExxonMobil, Occidental, these are some of the trades that I traded today, right? And you can see multi-months or sometimes multi-year breakout in energy name. So commodities up, you can see similar price action in gold that happened last week. Gold, silver, you have a clean breakout of all-time highs. And we are at 200 level consolidating, so healthy price action. And actually silver, despite dollar rally and despite, it looks like it's finally pulling back. But nonetheless, despite the rally in the interest rates and dollar, we do have gold continues to rally and silver. Fear of inflation, right? CPI data came in this week harder than expected. PPI data came in this week harder than expected. And then you have triple witching expiration, where from the positioning point of view, you do have a lot of options. Those put positions are expiring today, and people have to reposition, whether they have to reposition in small cap, biotech, or NVIDIA. It's a similar process. So looking at the 10-year yield, you have vertical move to the upside after CPI and PPI data, harder than expected, going into the very important week. Next week, we have Powell press conference and FOMC decision, Bank of Japan, and ECB, all happening on Wednesday, Thursday. So going into that event, 10 years higher and higher than expected CPI and PPI data. Dollar also looks like today finally bouncing back from the oversold levels and facing 200-day moving average. Value stocks pulling back 1% down. You have QQQ down 70 basis points, semiconductors down 2.5%, spiders down 60 basis points, and IWM. Interest-sensitive sectors like gold miners, ARK Innovation, regional, small caps, biotech, all down, 2-3%. So what is next, right? It looks like QQQ is trading again below the support line. You do have a pretty big reversal in Bitcoin. It looks like Bitcoin is trying to briefly broke below 70,000, and NVIDIA is trading at 874, kind of a double top, going through the consolidation at 840 level. So let's take a look at the spiders and figure out how are people positioning going into the triple witching expiration, going into next FOMC decision, right? Because Powell is in very difficult situation, right? He committed that he's going to cut interest rates 3 times, right? At least 3 times this year. Market expected as much as 5, but at least 3. So he can't really say, well, just because inflation is higher for these past 2 months, I'm not going to cut interest rates. So that's probably off the table, especially with elections and expectation that interest rates will go down. So then the question is just a matter of time, right? Everybody thought it's going to be in March. Now everybody thinks it's May. Based on the press conference next week, it could be May, it could be June, or it could be right before the elections. So nobody knows that, and the further we push that date for first interest rate cut, which is more or less symbolic, but that's basically it's the race, right? Race to the top. That's the start, right? That's kind of if you're in the race, somebody has to shoot the gun, and then everybody's off to the races. So that's the first rate cut. Maybe not going to change everyday lifestyle, but it will give a signal that interest rates are going lower. So going into this event, our friends at Tradier developed this awesome program, TradeHawk, that basically tells you positioning, right? How are everybody's positioning going into the triple witching expiration? So today we're trading right at 512. And let's zoom out.
Hi, Vlad. Would you mind resharing your screen?
Oh, I apologize.
Yeah.
Present. Share my screen. Well, good that I was just talking. Okay, you can see my screen now? Perfect. Okay, thank you. Sorry, I apologize for... I think you can see it. Yeah, we're good. Okay, I apologize. So I'll arrange both axes. So right now, with the March 15th expiration, which is tomorrow, you do have a large position. I mean, you don't have a large position, but you have pretty sizable amount of puts at 500 level, 500 and 504. So 500, 504, then at 20,000, there are still puts that could probably buffer the move. We are at 512, right? Let's zoom out. And we are right, and there is some positioning at 510 and 504 level, right? This is the most important level. That's March lows, right? So March lows is around 505. And you can see that there is a spike at 500 and there is a spike at 504. What does it mean? That at strike 504, there are still puts that are being used to hedge, about 30,000, 20,000 Vana. So pretty considered. They're going to expire worthless tomorrow, right? They're going to expire worthless tomorrow into the next week. We do have 20,000 position at 510. Right, so next Friday, we are pretty hedged at 510, around 20,000, and the next level is 505. So it is important support 510 and 505. If you look at the April, if you zoom out into monthly expiration, April 19th, you do see significant support at 500. So somewhere between 500 and 505, there is a lot of put buying where March lows in theory should hold, right? Unless there is new information like Powell's speech, right? If it's going to be very negative, I would watch 505 level, right? Because if we close 505, if we break through the 505 level, we'll probably get to the 495 level. And then overhead resistance is at 517. Similar idea. On the upside, there's a lot of call selling at 530. So I think going into the April expiration, going into the next earnings season, I think to the upside we could break the all-time highs, make new all-time highs, get to the 530 level. On the downside, I think we're pretty well hedged to 500 level. So maybe 15 points to the 3 to 4% to the upside, 3 to 4% to the downside. That's what I would expect, assuming there's no new information in the market and no black swan events. So I would watch 505 level. Short term is 512, 511. If you look at the aggressive power trader, model predicted 511. So neural network predicted 511 to be supported by 516 with a strong uptrend, potentially going into the summer, reaching 560 level. But short term, potentially 505 is kind of the line where the market sees support, which is March lows. So next week, all eyes are on 505. We do have kind of acceleration of the sell-off, right? You have pattern A, reconciliation C, and small caps, which are the most sensitive to the interest rates, are basically on its way to retest 50-day moving average, which has been a very strong support in this year, whether it's January, February, March. We've been at these levels many times, and we're at this level once again. So I would watch 198 level on small cap stocks. And in terms of positioning on IWM, Ted, good afternoon. Fred, Bob, Cecile, welcome. In terms of positioning, you have a relatively large position that expires March 18th, right? So that's not going to provide a lot of support. Then March 22nd, next Friday, weekly expiration. Not a lot of support, not a lot of volume. So the next volume is April. In terms of April, most of the positioning is around 190 level. So on the upside, positive surprise, 215. On the downside, 215 or 210, 215. On the downside, in terms of put buying, the high concentration in open interest is around 190 level. And we're basically approaching a 50-day moving average, which may or may not hold because there's not a lot of put buying at 190 level, not 198 level. So if the 198 level doesn't hold, if 198 level does not hold, then it does open up basically a door to retesting 2024 low around 188. So a lot of it basically contingent on the FOMC meeting and ECB meeting next week. Obviously, with triple witching expiration, you do have acceleration of the pullback because a lot of repositioning dealers, the delta is expiring worthless, right? Or delta is decreasing basically every day. And as these calls, right, long calls that everybody was buying, they expire worthless, dealers have to do something with their hedges, right, with their long stock. So in example of IWM, they're selling this long stock. And in example of NVIDIA, they're also trading at the session low. Any questions? All right, so sorry, the trader guys didn't see. So silver, right, we talked about silver. Strong move to the upside. It broke through the downtrend, right, and it is pulling back today, right? You have this downtrend from, let's zoom out to weekly. Right, so going back to 2021 highs, crude oil finally silver finally broke above this downtrend. It tried to do it 3 times. It tried to do it in May of 23, unsuccessfully. It tried it in November of 23, unsuccessfully, and it's trying it again in March, right? So we did reach 22 level. Let's see how much positioning is in silver. We did have a pretty large open interest at the 22 and 23 that basically expires. So the next one is April 19. So a lot less. So a lot less enthusiasm in silver, right? We were looking at this a week ago. We were at negative 90,000 on the 22, 23 strikes. So at this point, it doesn't look like people are as bullish on silver. So that's important information. I mean, there is some demand, right, at 24 and 25 strike. I would say sizable, 20,000. It's not 90,000, but it's 20,000. So, in options trading, it's all about relative, how many contracts you had a week ago versus how many contracts you have now. You can definitely see a big drop in the silver enthusiasm after the rally. So we may or may not break through this overhead level, especially as dollar continues to rally and interest rates continue to rally. If that's the trade, then silver will probably pull back to this uptrend. If the dollar drops and interest rates drop after the ECB decision and FOMC decision, then you could have continued the rally. Silver underperforming gold, right? Gold already broke out and strong move to the upside. And then we were talking about ExxonMobil, right? So ExxonMobil continues to grind higher as crude oil is above this important breakout level of it's above 80 level. So that's if I zoom in. So there is still a lot of overhead resistance at this junction. So it has to get above 81, but it is trading above 80, which is marginal new highs. If you look at XOP, oil drillers, or if you look at the ExxonMobil, XOP is approaching 155 overhead resistance, right? The last year, 2023 high. It's not that far from 2023 high. If you look at the positioning, there is a lot of call selling at 1 and 155. So it looks like it could get there, right? It could continue. It could get there shortly. And similar ExxonMobil. Large positioning at 115 strike. So it looks like ExxonMobil can get to 115 level, assuming the trend continues. All right, any questions? Bob, Fred, Cecile, Cool, Patrick, Ted, Thomas. All right, in terms of, so we talked about crude oil, we talked about silver and gold, we talked about key level and spiders and QQ, triple witch and expiration. So I would hedge, right? The bottom line, if you look at some of my positions from the dynamic power trader where I trade both stocks, bottom line, you want to hedge into this event. So I have QQQ put spread for 3420 put spread, and I did trade ExxonMobil. So you have a combination of options and stock trading that you can find in dynamic power trader. You can also, on Yellow Tunnel, you can find different blog and videos. So please subscribe to Yellow Tunnel, find Yellow Tunnel on Twitter and subscribe as well. That would be greatly appreciated, trying to build a community and posting more information on signals and predictions. Okay, so now earnings, 2:30. So we do have earnings. Last week we did, I think, Oracle, right? We did Oracle last week. We did the Dollar Tree, right? If you look at the earnings power trader. I did trade Oracle, right, and Dollar Tree. So the idea is that you can do these condors, right, or butterflies, right? So the question is, do you want to be long the volatility or do you want to be short volatility, right? Do you want to sell volatility or buy volatility? Well, Adobe announcing earnings tomorrow, and with market pulling back and triple witch and expiration, most likely tomorrow is going to be a large movements to the upside or to the downside. And if I have to guess, based on positioning, probably to the downside, right? We're probably going to get to, potentially can get to 505 level. So in terms of positioning, Oracle, I was able to buy, spend 64 cents and close it for $1.20, right? So if by looking at the which strikes have the highest open interest, right? Oracle had the highest open interest, very large spike at the 125, 130, 135 level, right? You can see even today, despite all of the earnings and volatility in the market, it acts almost like a magnet, right? It's almost like a magnet. At some point it was at 130, at some point it was 120, but it's still trading at 125, right? As almost because of these options that were expiring in March, it's attracting buyers and sellers as a kind of the line where the supply meets the demand, right? And until this March expiration, it's, despite all the volatility, Oracle is still at 125, right? Same level that it was on March 11th. Not before, same demand for these strikes before the earnings announcement. So in a similar fashion, you have Adobe earnings. I mean, it's a $570 stock. So if you're trading one contract, you're trading $57,000. So if you want to short volatility, I would not do it, right? I would not sell credit spread. I would not sell iron condors. I would not sell a put spread or any other credit strategy where you think you're selling volatility because you think VIX has jumped to 15 and tomorrow it's going to be at 13 again, right? I mean, if you think it's going to be at 13 tomorrow, then yes, you want to sell volatility. If you think we could be at 18 tomorrow, well, you're probably going to want to be long the volatility. What does it mean to be long volatility? It means you're doing a debit strategy, right? So Adobe is a $500 stock. I usually don't like to do it because I do a lot of depending on the strategy, I do iron counter, so I sell premium. So you do have, you don't have, Oracle type of demand. Oracle, there were 2,000, 3,000 then, but you do have relatively large position at 650, right? That's kind of where the stock is gravitating toward. 650 is 80 points. I did the calculation, right? We can do the calculation on Tradier. Kind of approximation. People use straddles, people use strangles. I'm used to this. You basically take 20. At the money straddle, right? So 20 plus 20 is 40, plus another 20 is 60, plus another. So roughly $80, right? So roughly $80, meaning that's 2 standard deviation. You would divide it by 2 if you want to know 1 standard deviation. So 70% of the time, the move is $40, which is about 8%, right? 7 to 8%. 2 standard deviation move is $80, right? Which is about 14, 15%. So, but tomorrow we have a triple witching expiration. I don't want to sell credit. I don't want to sell spread. So how can I take advantage? So let's assume it does move 2 standard deviation. And most of the AI stocks had the very similar setup, whether it's Dell, whether it's NVIDIA, Taiwan Semiconductor, Oracle, negative VANA. Basically, people are selling the puts, right? Risk reversal. They're selling the puts because there's a lot of premium. There's a lot of demand for these puts. You can see it by the spikes. And they are financing, they're taking the premium to finance long calls, right? So they're buying long calls. There's no put buying or there is no selling of the calls. So that basically opens up an invitation to moves in 2 extremes, right? If they're going to be like Oracle. They're going to beat that on the top line, maybe slight miss. Maybe they beat on the bottom line. They say, listen, our tools, our cloud computing is growing, like Oracle said. There's a big demand for our new generation of our AI tools. We think that we're going to hit a home run in the next, in 2024, and the stock moves to standard deviation, right? As simple as that. Even though they actually had a slight miss on the top line. Or you could have like Palo Alto, right? Palo Alto or MongoDB, where you miss on the bottom line, you miss on the top line, and then you're moving $80 to the downside, and then you do have a big spike at 500 level, right? 500 level. So I propose to do, you could do butterflies, right? The only reason I don't like to do butterflies, again, because it's a it's $570 stock. But let's see what we can do. So maybe we'll end up doing butterflies too. So 500 is a magic strike at the put level. $80 would take you basically to 490, 500. Let's see, trade option. Let's see, Adobe, butterfly. Let's do $5 spread. Let's see how liquid it is. So around 500 level puts. So you can probably put it 505, 500 to 495 with the idea that it will gravitate toward 500, right? Which is that $80 drop. It will be 490. So about 15 cents. Let's see, can I buy it for 15 cents? Let's see how well is this execution. Okay, it's actually got filled. Okay. So if they missed on the bottom line or top line, right, and there's no puts, it'll probably, there is a chance that it could gravitate toward $500 strike. So as long as it's trading somewhere between 495 and 505, ideally you want it to expire at 500. Then I'm risking 13 cents to potentially make $5, right? So very small risk, high reward, right? If they hit a home run, right? If they hit a home run, I think the stock will gravitate toward 570 plus 80. That would be 650. So 650. It will probably gravitate toward the 650 strike because that's pretty large position at that level. So we can do the same similar trade and do $5 strike intervals for the call spread. So we calculated $80, right? Two standard deviation, $80, 80 plus 560, 570 is 650. Okay, so 650, fine. 650, how much is that? So 645, 650. Let's try to do $10 strike difference. Maybe widen it a little bit. $650 strike, $650, $650. $650 you'd have to spend, so also 30 cents. So about 30 cents. Okay. So basically, I'm buying 495, 500, and 505 put, right? $5 butterflies, or you could do $10 on calls. I decided to do 10 wider range, and then I could get was filled 25 cents. So I'm risking 38 cents. So the most I can lose is 38 cents, right? But if because it's 1 by 2 by 1, right? Let me just make sure that I'm doing. Yeah, so it's one. Short. I'm selling 2 contracts and then buy 1. But if it does gravitate toward 650, or if it does gravitate toward 500, then any questions on this trade? Let me do this in my. So 640. Sell 650. So 660. Any questions? And then on the puts, let's go through the puts. Buy to open 495. So 495, sell to open 500, and buy to open So pretty liquid butterfly. So there's a lot of demand. All right. Any questions on the butterfly or open interests? So calls, I mean, you could do 10, you can do $15. I mean, the wider, the more premium you have to spend. So it just depends how much money you want to spend. I mean, here I'm risking $38 on one contract, 1 by 2 by 1. You know, if you want to risk $50, I mean, then you just, and you know, the wider the net then the higher the probability, right? So if you do 515 by 475, you pay extra, a little bit extra, but then you're opening up, you know, to make profit more, right? And same thing at 650. You can do 640, 650, 670. You can do 630, 650, 670, and you just cast in a wider net. Okay. Any questions? All right, let's review other positions. So let's look at the market. So it looks like VIX reached 15 level today. NVIDIA is closer to session low. Was 866. General Electric. So you could see a lot of stocks that were the leaders of the market are now pulling back. Amazon, so some of the Magnificent Seven stocks like Amazon is up 1%, Apple is up 1%, Microsoft is up 2%, new all-time high. So, and that's providing support for the QQQ, for technology sector. Chinese stocks are taking a break, right? Down 3.5%. Robinhood today, after the better than expected announce, a lot of people are trading, right? So Robinhood is up 4%. Verizon is down, sitting at this key support level. This is one of my long positions. So I'm watching this level. If it breaks below that level, I would exit that position. EWJ is still in uptrend, but again, we have ECB decision. It's still staying at the uptrend. I do have a put hedging. If we break below that level, then I think next level will be 50-day moving average. NVO continues to grind higher, consolidating. And let's see any other positions. Talked about Adobe, Dollar Tree, I'm out, eBay, WJA, NVO. And then hedges, right? I do have QQQ, SH, and semiconductors as a hedge. So SMH is sitting at the very important support level, making new marginal lows, right, at 218. So I would watch SMH level. So March 22nd. So next support level is 215. So we do have small positions at 215, relatively small. Let's go to April. And you have both negative and positive. So that is an issue, right? So there are people long and short. So SMH and NVIDIA, I think the issue is that there is really no strong put buying, net put buying. There are puts, people buying puts, but not net long. So I think if this level doesn't hold and we're continue to make lows, then somewhere 50-day moving average, right? 200. Yeah, we can quickly get to 200, right? Because that's where a big spike in April, right? People basically selling 200 puts. That's the largest one, 200 and 190. So somebody's selling 200 puts, right? At 50-day moving average, basically saying, well, we're not going to drop below 50-day moving average. So that will probably could act as a magnet, So if triple witching expiration happens tomorrow and ECB and Fed says something negative, we could be at 200 rather quickly, which is, 8-9% pullback in semiconductors. Value stocks are also under pressure, sitting at the key support for the past few weeks. Dow Jones, similar setup, approaching 50-day moving average. Spiders outperforming because of the support of Magnificent Seven. So let's see. Mostly it's red, right? Mostly red. We have REITs pulling back. My favorite Beyond Meat is pulling back. This is a perfect example of gamma squeeze where stock doubles, goes from 7 to 16 after hours, and then back to 7. Biotech is, broke through the breakout level. Right, we had a breakout. It's at 50-day moving average. China looks like reversing to the downside. Gold, aluminum, steel, all negative. Energy. So energy is the bright. So you have energy and some of the Magnificent Seven. Like Apple is up 1%, Google is up 2%, Microsoft is up 2%. And we were talking Tesla this morning. So Tesla is in very precarious position where there's some positioning at this level, 160 level, but not a lot, right? So if we break below 160, we could reach October, the lows of the last bear market, 114, right? So Tesla is definitely accelerating the sell-off. The shorts are pushing the stock down. Microsoft is up, Amazon is up, Netflix is flat. Meta is down, JP Morgan is down, Wells Fargo is down. Affirm, Bob's favorite, Affirm, Rivian down. Okay, so it looks like for the most part is, home builders after Leonard earnings looks like a large reversal. China, VIX is up 10%. Yeah. So energy bright spot. I do see energy bright spot, and Microsoft, Apple, Amazon. So that's a good sign that it's not an indiscriminate just pullback, but nonetheless pullback. All right, any questions on Trader or? Okay, should have looked at the chat. Sorry. Okay. John, yes, Tesla doing good. Very nice. Puts working for a long trade. Mercado Libre watching for the long trade. Okay, just be careful with Mercado Libre. It's not very liquid, right? So that's the problem, right? 260,000 shares. So, but it's a pretty, similar pullback than any other high beta stocks. All right, let's see. I do have so let's see, QQQ. It's actually breaking even now. I mean, SMH is trading at $2.35, the put spread that we put down. So that's 40%. That's 40, let's see, 235. 235. That's 45 cents. That's 20%. So I'm going to probably close the SMH. It's a 20% profit. 40, and I'll leave. Hold on. I have QQQ, which is also approach. All right, I'm going to close a SMH. I mean, it's quick 20% return. 50, 30. Should I leave it? Let's leave it. Tomorrow's going to be a pretty wild day, so I'll leave it. We could have a rebound off of this level, or we could have continuation. So leave it on. All right. UNG is up 5%. Any questions? So in terms of the advantage of butterfly, you don't need to defend them, right? They either expire worthless, right? Or they're gonna, if they approach the strike price, then that's the maximum when it expires tomorrow. So you don't really have to watch Adobe, but tomorrow we're gonna have a strategy route table, and we're gonna talk about market conditions, and all eyes on this options expiration as VIX is rising. All right, that's all I have for today. Thank you very much, and have a great day.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be a financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc., all rights reserved, member FINRA SIPC.